Are we about to witness one of the largest bank runs that we've ever seen since 2008? And are we looking at one of the largest setbacks to tech startups, VC firms, and even the wine industry that we've seen in decades because of what is happening right now at Silicon Valley Bank? If you're like me, before Thursday, you may not have heard of Silicon Valley Bank, but it is one of the largest top 20 banks in the country. And so if you haven't heard of this bank like I had not, I made this video for that reason, because even if this doesn't impact you and you don't have money in this bank, I think this is something that we all need to know and understand about is what the Fed might do, what does the FDIC actually cover. And so we're going to walk through what actually happened with this bank, what the Fed is talking about, what the decision that we may see come this week, early tomorrow, Monday morning, and what we should be doing in light of that. So Silicon Valley Bank is a California-based bank with branches all over the world. They have a large presence even in the UK, and they were trying to raise $2.25 billion in capital to shore up their balance sheet, and that failed. And that was the start of the snowball that we saw happen Thursday, Friday, and now continuing over this weekend. And as this news of this failed capital raise came out, you even saw some big names in hedge funds like Peter Thiel come out and tell all of his clients that they needed to pull their money out of the bank, but he saw something coming when he looked at their financials. And I even heard from someone personally that works for a VC fund based out of California that as of Thursday, they were told that they were moving all of their money into new bank accounts. So that was actually happening come Thursday and into Friday. And before all was said and done on Thursday, you had $42 billion pulled out of SVB by the end of Thursday. And so for people that are in the VC tech startup space that had cash in SVB, this is a major panic moment right now for them, because payroll for most of these companies is Wednesday and all their cash is locked up and they don't know how they're going to make payroll. So for them, for a lot of these companies, this is a bigger panic than COVID or some of the other major financial crises we've recently had, because a lot of these companies may be on the brink of bankruptcy depending on what the Fed's decision is coming this week. And even with all this, we now know that the CEO went and sold $3.5 million worth of shares at the first of the month, and even the CFO sold a little over $500,000 just in the middle of February. And then coming to find out, even after that $42 billion was withdrawn on Thursday, the company still went and paid annual bonuses to all their employees on Friday. So there's a lot of questions to be asked about the inner workings of the company leading up to this crash. But what actually caused this bank to go under and the FDIC to take over, which they now have done? So looking at their financials as of 12/31, so as of the end of 2022, we don't have anything that's happened since then, but we know that they had about $211 billion in assets sitting on their balance sheet, and about 196 billion in liabilities. But part of those assets was about 91 billion that is in held to maturity bonds. So those are things like T-bills and mortgage-backed securities. But if you look at their financials, that had a $76 billion fair market value, which means if it had to be sold now, it was going to be sold at about a $15 billion loss, because of when they were bought. Since then, the Fed has raised interest rates, which has decreased the value of those bonds. And in reality, if they do have to liquidate all these, they're not going to get sold at fair market value. They're going to get sold at a probably 20 to even 30% discount, which makes that loss even greater. But as you go down into their list of assets, they have things like a goodwill of 375 million, about 136 intangibles. They have about a $335 million lease. None of that is liquid and really able to be sold at any value. So that, again, exponentially increases the loss on their books. And so those were the things they were trying to shore up with this capital raise. And when that happened and people looked at their financials, they realized that they were going to be insolvent. And now, with taking those losses, their debts would have been greater than their assets, and they would not have been able to cover deposits if a lot of customers began drawing all that money out. So another factor to this was the fact that a lot of venture capitalist firms aren't pushing out a lot of new cash. So this bank didn't have a lot of new cash coming in, and all these tech startups were using capital and cash in their bank to run their business and make payroll. And because there was no new cash coming in, Silicon Valley Bank then had to go and turn and sell some of these maturities that they were planning on holding for maybe even like 10-year T-bills, having to sell at a discount and begin taking losses. And as those losses started to build, that is what kind of helped create this snowball that is causing this bank to fail. And this is not just a Silicon Valley Bank issue. Any banks that would have bought any type of bonds or securities that were purchased anywhere in like the 21 through most of 22, where the interest rate was lower than it is now, if they have to sell those before the maturity date, they're going to be taking a loss. And so if there is a run on the bank and they have to sell these in order to have cash to fund these customer withdrawals, you're going to see this start to happen to many other banks. And you can look on your bank's financials to see what their unrealized losses are. And if you look at this Fed report, you can see that there is a massive amount of unrealized loss on all these different securities because of the Fed rate hike. So what is happening now to SVB? Right now, over the weekend, we're looking at hedge funds looking to buy out a lot of these accounts from these SVB customers at a discount. So these hedge funds are coming in and offering upfront cash right now. So let's say a customer has about $10 million in the bank. They need to make payroll. Hedge fund may come in and offer $6 to $7 million cash now in order for them to sign over that account to them that may not be open for weeks or even months as this process goes, but they need the cash now. All right, I'm throwing this in because while I was editing this video at my parents' house for a family meal, this news came out from the Fed stating that all depositors of Silicon Valley Bank will be made whole. It says no losses will be borne by the taxpayers, but that is a little hard to believe. And at the same time, there was another bank, Signature Bank, out of New York City, was also closed by regulators, and they are also saying all depositors of that bank as well will be made whole. It does say shareholders and any unsecured bondholders will not be made whole, but all depositors will be made whole and funds will be available come Monday morning. And so they are pulling from a special fund that the FDIC holds. And additionally, the Federal Reserve Board on Sunday will make an additional funding to eligible depository institutions to help assure banks have the ability to meet the need of all their depositors. So they're also making additional funds available if there are some runs on some other banks, and those banks do need additional funding to stay open and provide funding for their customers. They are making an additional fund available for this. So I wanted to update you guys on this. And so we still need to see what's going to happen Monday morning. There still potentially could be runs on some of these small banks. So what do we do in light of this? Like I said, most people had not even heard of Silicon Valley Bank. I had not heard of it before all of this started. But I think as news spreads of this, as it flows through Twitter, as you see it all over the news, people that have small businesses are going to be worried if their funds are safe. And a lot of people are going to think, I better be safe than sorry, and pull my money out, put it into a larger bank because I need this cash this week for payroll. And the number one thing that all of us need to do, even if you're not a small business, is to understand the health of the bank or the institution that your money's in. Make sure you can read a financial statement and you can review their own financials, and so you understand the risk there. Understand what the FDIC coverage is at your bank or at that institution, or if there is FDIC coverage. So I hope this was helpful. If you didn't really understand what was going on, that you have a little bit better picture of this. I hope you guys will continue to like, subscribe, hang in there as I continue to do more research and bring out more content for you guys. Hit that notification bell, and I will see you on the next one.